Welcome to Dr. David Eifrig's Health and Wealth Bulletin. This is Weekly Update. Right now we're in the middle of May, which means you're likely to hear the adage, sell in May and go away. Now, this is an old piece of advice that really involves Wall Street going on vacation, which is typically starting around this time of year. And with all those people on vacation, there's less money being invested in the markets. So folks typically used to use this adage to take profits and take the rest of the summer off. This is a really big mistake, especially this year. That's why today we're going to focus on 4 things you can do and should do this May. Now, the first thing we want to focus on is volatility. Now, volatility is a measure of just how much stock prices fluctuate over time. Periods of low volatility generally mean there's a market complacency. Now, of course, this can change depending on the type of stock as well, as some are more likely to have volatile price swings than others. But there's a general market index called the CBOE Volatility Index, which measures volatility across the market. Now, right now we're seeing this has plunged. It's down about 13% as of last week. And just a few weeks ago, it was above 20%. 3 months ago, it even shot up past 35%. So right now, looking at volatility today, there are 2 questions we really should be asking. So is this the calm before the storm? Or is the market simply returning back to its level of complacency where it was in 2017? We don't know what's going to happen or when exactly the downturn will come. No one can predict that timing. But as you can see in this chart, we looked at the most recent bear market from 2008 to 2009, and you can see the volatility typically drops right before there's a heavy sell-off. Now, that doesn't necessarily mean today's very low volatility numbers mean that we're going to have an imminent correction. In fact, we could be in a similar stage that we were in early 2007 when the market continued to go higher and volatility was low. But we could also be at the precipice of a bear market. And either way, we really want you to pay attention to your portfolio this month and follow these 4 steps. Now, our first point is if you're looking to put any money into the market right now, look at companies that can withstand the coming storm. We're talking about big, solid, blue-chip companies that are unlikely to be affected with any big swings in volatility. Now, we actually recently recommended such a company in Retirement Millionaire, one that's poised to profit off the coming tech hurricane that we spoke about. If you're interested in that, we're going to have a link in the description below. Now, our second point is to take time this summer to reevaluate your portfolio. This is a great time of year to go through every position that you have, go back to why you bought it in the first place, and see if it's still holding up to that same logic today. For instance, if you bought a stock a few years ago because it was a solid dividend payer, you want to make sure that they're still paying dividends and that it's living up to your expectations now. This is also a good time to trim some positions that you might be ready to let go of, and it's also a great time to rebalance your portfolio to make sure that you have proper asset allocation. And our third point, going along with reevaluating your portfolio, is to take a look at all of the stops you have on your positions. Whether you have hard stops or trailing stops on your positions, we always recommend to track them yourself, not to put them into the market. Remember, if they're out in the market, other people can see them, and some unscrupulous folks can go ahead and mess with the stock price to get you out of a position. So while you're tracking them on your own, it's a good idea to think about things like volatility and how much that stock might move and when you would like to sell it. And if you want to learn more about the difference between hard stops, trailing stops, how to pick which one is correct for you, we're going to have a lot of information for you below in the reading materials in the description. And finally, our fourth point, May and over the summer is a great time to shop around for a new broker if you're not happy with your current one. There are a couple reasons for doing this, but the one thing you really should look at is keeping your brokerage fees low. You certainly don't want to be paying too much for making trades or having someone manage your account, because that's money that could be going toward compounding and earning you more in the future. So use this time to check up on your fees and see if there's a better fit for you elsewhere. That's it for today. We hope that your May is very productive and you use these tips to help your portfolio no matter what the future brings. Don't forget to keep sending your questions and comments to our feedback line. Like, share, and subscribe, and we'll see you next week.